All right, so here's what we're gonna do. We're gonna go over the next thing, and that is your buyer costs. And I'm gonna label them through these 5 items right here. One of the first things you might expect as a buyer is that you're gonna pay a down payment. So I wanna tell you this about your down payment. A lot of times people assume that they have to put 20% down, and that's not really the case. In some cases, you can get a down payment that is 0. So that's typically with VA loans, but 3%, 5% is pretty normal. So with your down payment, 20% actually removes the lender's PMI from your mortgage payment, which is about $80 to $100 a month. And that protects their investment and mitigates their risk in case of defaults. So 20%, you can get rid of PMI on your house. But a down payment at 3% for a $200,000 house is $6,000 that you would need to expect to bring with you out of pocket to purchase that house. Secondly, we'll talk about earnest money. And earnest money is essentially your deposit to the seller to go through with the terms of the contract. So essentially this is going to come back to you as a credit. So you're going to give this up front. When everybody signs it, you're going to deposit your earnest money with the title company, and that escrow officer is going to hold that money until closing, and then you're going to receive it back as a credit toward your closing costs. But if you do break the contract or break any terms, that earnest money then goes to the seller, an agreement to basically say, hey, we kind of wasted your time here, we didn't follow through with the terms, and it kind of protects them and the time that their house is spent on the market not being shown. So that's what earnest money is. A lot of times for a $200,000 house, we'd see $500, maybe $1,000 being put down. In a scenario in which you have multiple offers, you might see earnest money getting up to $3,000, $4,000, $5,000, just to show how serious you are about buying the house and seeing it all the way through. So third is your inspection fees. This is going to be an out-of-pocket expense. A lot of times people don't anticipate this, but this is going to be maybe about $500. This is going to take your general inspection, termite inspection, maybe radon in case that's needed in this particular house. It has a basement, you need to check it, crawl space, you need to check it. But radon can pop up in a lot of places. We'll go through that a little bit in the inspection video that we'll talk about. But you can expect about $500 out of pocket there. That's also going to be an estimate on your closing fee sheet that your lender gives you at pre-approval. So let's say they say, hey, you know what, we expect your closing costs to be around $5,000. They're estimating, they should have an inspection estimate in there, as well as next the appraisal. So your appraisal is going to come after inspection typically. Lenders will hold off to make sure everything comes through. We're going to go through on the house. They'll order the appraisal. This is basically the lender making sure that the purchase price is actually the value of the home, or the purchase price is better or lower than the value of the home. So this is typically about $500, and you'll have to pay that out of pocket as well. And that's going to be a credit back to your closing costs. So if you see that lender fee sheet and it says, hey, your closing costs are going to be about $5,000, you know that when you put that $500 in, that's going to get credited back to that at closing. So at closing, you really only have maybe $4,500 to pay instead of $5,000 because you paid this. Plus you have inspection too. So there are other fees that'll get credited back at closing. So that's appraisal. And then number 5 is your closing costs. So these are going to be lender fees associated with the mortgage or the loan that you're taking out. And then also it's going to be your prepaids. So this is going to be taxes and insurance that are going to get put into an escrow account. So typically closing costs on, like, let's say it's a $200,000 house, you can estimate safely that that's going to be about $5,000. Half of that's going to be in prepaids and taxes. The other half is going to be lender fees that they're associating with creating the loan and providing you the service to mortgage the house. So these are the 5 things that you need to expect. You have to have your down payment ready, earnest money ready, inspection fees, appraisal, and then know about closing costs. And closing costs, we'll talk about this a little further in detail. This is something that sometimes you'll hear people go, hey, we're going to submit an offer, we want to buy this house for $200,000, but we want the seller to pay our closing costs. So basically you could be asking the seller to pay your $5,000, so you're only responsible for paying your down payment, which makes your out-of-pocket expense a lot smaller. So these are the 5 things that you need to know in regard to your buyer closing costs so that you can be ready to buy your house.